Ladies and gentlemen, good day and welcome to the HFCL Q1 and FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Statements made during this call may be forward-looking in nature based on management's current beliefs and expectations. They must be viewed in relation to risks that HFCL's business faces that could cause in future results, performance, or achievements to differ significantly from what is expressed or implied by such forward-looking statements. Investors are therefore requested to check the information independently before making any statements or decisions. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Mohit Lohia from ICICI Securities. Thank you and over to you, sir.
Yes, hi. Thank you, Shruti, and good evening, everyone. Thank you for joining us today for the Q1 FY26 call of HFCL Limited. First of all, I would like to thank management for providing us the opportunity to host the call. From the management side, we have Mr. Mahendra Nahata, Promoter and Managing Director, Mr. Vijay Raj Jain, Chief Financial Officer, Mr. Manoj Baid, Company Secretary, and Mr. Amit Agrawal, Head of Investor Relations. So without further delay, I would now hand over the call to Mr. Nahata for opening remarks. Thank you and over to you, sir.
Thank you, Mohit. Good evening, ladies and gentlemen. I extend a warm welcome to all of you on HFCL's earnings call for the first quarter of financial year 26. I trust you have had the opportunity to review our financial results, press release, and investor presentation, which are available on our website and the stock exchanges. As we step in financial year 26, India continues its strong momentum as a hub for digital innovation and self-reliance. The government's push towards artificial intelligence, 6G readiness, and indigenous technology development is rapidly reshaping the country's telecom and defense ecosystem. The Department of Telecommunications, in collaboration with academia and industry, is laying the groundwork for AI-native 6G networks, which are poised to define the future of ultra-high-speed intelligent connectivity. HFCL is actively contributing to this national mission by developing next-generation technologies for 6G in collaboration with premier academic institutions. These initiatives not only position India as a future-ready digital powerhouse, but also reaffirm HFCL's commitment to being at the forefront of technological advancement. India's 5G rollout has made phenomenal progress. In just 22 months since launch, 5G services now cover over 82% of the population, with more than 470,000 5G sites installed. While rural 5G coverage is still in progress, India has already achieved near universal 4G penetration across its villages. This swift infrastructure expansion is a testament to the sector's agility and committed to digital inclusion. Q1 of FY26 marked a strong and encouraging start of the year with healthy momentum across our key verticals: telecom, optical fiber cables, passive connectivity solutions, and defense. The emergence of hyperscale data centers and progress in the implementation of BharatNet has opened up very encouraging new business opportunities for HFCL, both for optical fiber cable and passive connectivity solutions and telecom products. Modernization of defense forces will also lead to increasing demand for defense products. After nearly 6 to 7 quarters of subdued demand in optical fiber cable business, we are now witnessing strong resurgence in global demand. This renewed momentum beginning in Q1 of FY26 has enabled our manufacturing facilities to operate at optimal levels. The increase in business activity has translated into consistent and efficient plant operations, making a notable improvement from muted performance observed up to Q4 of financial year 25. A revival in demand has led to notable increase in revenue contribution from this segment, further strengthening our growth trajectory in the connectivity domain. Our optical fiber cable business continues to remain a key growth engine for HFCL. During Q1 of FY26, We secured export orders for approximately 300 crores and achieved export revenue of around 210 crores. This quarter also marked the onboarding of several reputed global customers, along with repeat orders reflecting strong customer satisfaction and trust in our offerings. We obtained product approvals from many leading customers, further strengthening our global footprint. Additionally, our high-value fiber products are gaining significant traction, particularly in European and Asian markets, which are known for their stringent performance standards and competitive benchmarks. The global demand for high-capacity fiber infrastructure is entering a transformative phase, fueled by rapid growth of hyperscale data centers and next-generation digital infrastructure. These applications require scalable, high fiber count optical networks. With the unprecedented increase in hyperscale data centers, we anticipate a sharp surge in the requirement for high count fiber cable, particularly intermittently bonded ribbon cables, over the next few years. I am pleased to share that HFCL has already strong order book for high capacity IBR cables, with a very strong pipeline of additional opportunities under discussion. With a sharp increase in demand for high count fiber, particularly IBR cables, we are significantly expanding our manufacturing capacity to ensure that we are well positioned to capture a significant share of this high growth market. To further strengthen our leadership position in advanced OFC technologies, the Board of Directors, in its meeting held on 11 July 2025, approved the expansion of IBR cable capacity from 1.73 million fiber kilometers per annum to 19.01 million fiber kilometers per annum at our Hyderabad and Goa facilities. This will enable us to meet rising global demand, particularly from North America and Europe, where we already have orders from major customers. With this planned expansion, our total optical fiber cable manufacturing capacity will increase from 25.08 million fiber kilometers to 42.36 million fiber kilometers per annum, significantly enhancing our ability to serve both domestic and international markets. This enhancement in capacity will make HFCL one of the leading suppliers of optical fiber cable internationally. This enhancement in manufacturing capacity of IBR cables aligns with our strategy to diversify our cable portfolio and reinforce HFCL position in high volume international market segments. With a strong traction we are experiencing, particularly from international customers, we are confident that our optical fiber cable business is poised to more than double its revenue in FY26 compared to FY25. This growth reflects not only recovery in demand, but also a structural shift in the global optical fiber cable landscape, where HFCL positioned well to lead. Our passive connectivity solutions are playing a pivotal role in resolving last mile challenges faced by telecom operators. By offering integrated, ready-to-deploy solutions for urban, rural, and enterprise networks, we are not only improving network efficiency and uptime, but also deepening our value across the entire connectivity ecosystem. On the passive connectivity solution front, we secured several orders across both domestic and international markets. As part of our long-term strategy, we are committed to have significant revenue from this segment of our product portfolio. HFCL is sharply focused on tapping into massive opportunities emerging from explosive growth of hyperscale data centers. Apart from high count fiber cable, we are also developing passive connectivity solutions specifically for data centers. We expect to have significant increase in revenue from passive connectivity solution business with data centers also. We also expanded our cable reinforcement solutions globally with export orders for FRP routes to the US, Belgium, UK, and Saudi Arabia, along with repeat orders for thermal FRP routes from international cable manufacturers. These components are critical in ensuring the structural integrity and durability of modern fiber optic networks, especially in challenging environmental conditions. In the telecom equipment space, we achieved a major milestone by successfully developing indigenous MPLS routers designed to support backhaul, fiber broadband, and enterprise networks. We are proud to be the only Indian manufacturer, aside from Tejas, to develop such routers. These next-generation routers are engineered to deliver carrier-grade performance even under harsh environmental conditions, making them well-suited for both civil, including rural and defense applications. We have already commenced commercial deployment of routers in a domestic telecom network under real-life traffic conditions, successfully validating their capabilities. Friends, HFCL has secured orders worth rupees 650 crores for routers under the BharatNet Phase 3 program and expect to receive significant additional orders as more states roll out their implementation under BharatNet program. While the domestic market itself presents strong growth opportunities, we also see immense export potentials for our routers, given the global demand for secure, scalable, and self-reliant connectivity infrastructure. This reinforces HFCL's positioning as a technology-driven company with a robust, future-ready product portfolio. Our strategy to move up the value chain by offering smarter, technology-led telecom products is showing strong results. We continue to expand our offerings across 5G and enterprise connectivity. Recently, we secured a repeat order worth rupees 175 crore for our indigenous 5G networking equipment, underscoring our Make in India capabilities. In the defense vertical, HFCL made transformative progress during this quarter. We secured a landmark contract for thermal weapon sights for AK-203 rifles. This achievement highlights our R&D maturity, manufacturing capabilities, and adherence to stringent defense quality standards. Additionally, we are declared as L1 bidder in rupees 90 crore tender for tactical cables, which are deployed by Army in battlefield conditions. These cables are a vital part of HFCL's high-performance connectivity portfolio, designed to ensure secure, resilient, and mission-critical communication in demanding operational environments. We also signed 3 memorandum understandings with UAV manufacturers to co-develop next-generation unmanned aerial platforms with weaponized drones aimed at modern warfare, surveillance, and logistics applications. In parallel, we are developing a state-of-the-art drone detection radar with soft kill option, which is expected to enter a production phase within the current financial year. Live trials of these products is currently underway, with field trials expected to start shortly. The product has already generated strong market interest given the rising need for autonomous aerial threat management system. Further, our electronic fuses for artillery guns are also scheduled to undergo live testing in August by DRDO following the recent receipt of ammunition from Munitions India Limited. This marks a key milestone in our defense roadmap, with production expected to begin soon after successful trials. We have signed 2 technology licensing agreements with DRDO for compact trans-horizon communication system and multi-mode hand grenades, strengthening our role in providing high-performance battlefield solutions. We are also in advanced stage of securing technology transfers from DRDO for mechatronic fuses, weaponized handheld thermal imagers, and compact airborne multi-sensor optical payload for UAVs. We have also applied for TOTs for UAV-launched precision-guided missiles and very short-range air defense missiles. These developments reflect our deepening collaboration with DRDO, reaffirm our commitment to deliver scalable, indigenous, next-generation defense technologies. The recent geopolitical conflicts and rising global security concerns have accelerated defense modernization efforts across the world. In India too, the government renewed Focus on indigenization and advanced warfare capabilities has created opportunities for companies like HFCL. With our deep R&D capabilities, cutting-edge technology solutions, and commitment to Atmanirbhar Bharat, we are strongly positioned to contribute meaningfully to India's defense modernization journey and tap into the growing demand of defense products. To further strengthen our brand and capabilities globally, HFCL showcased its defense portfolio at the 55th Paris Air Show, the foremost air exhibition in the world held last month. Our exhibits included artillery fuses, surveillance radars, thermal weapon sights, high-capacity radio relay systems, tactical communication, and EWIS assemblies. The event witnessed significant engagement from global defense OEMs, delegations, and technology partners. These interactions have opened up several avenues for international collaboration and export opportunities in the coming quarter. Driven by these wins, our order book as of 30 June 2025 stands at 10,480 crores, compared to 9,967 crores in the previous quarter and 6,776 crores in Q1 of FY25. Let me now highlight our financial performance for Q1 of FY26. Revenue stood at 871.02 crores compared to 800.72 crores in Q4 of financial year 25 and 1158 crores in Q1 of financial year 25. EBITDA stood at 42.93 crores compared to negative 22.33 crores in Q4 of financial year 25 and 185.37 crores in Q1 of financial year 25. EBITDA margin was 4.93% in Q1 FY26 versus negative 2.79% in Q4 of financial year 25 and 16% in Q1 of financial year 25. Profit after tax came in at negative 29.30 crores compared to negative 83 crores in Q4 FY25 and 110.65 crores in Q1 FY25. PAT margin stood at negative 3.36% in Q1 of financial year 26 compared to negative 10.4% in Q4 of financial year 25 and 9.55% in Q1 of FY25. Telecom product segment revenue contributed 66.35% of total revenue compared to 76.33% in Q4 of FY25 and 61.42% in Q1 of FY25. Q1 FY26 has laid a solid foundation for what we believe will be a breakout year for HFCL. With robust order inflows, expanding global demand of our optical fiber cable and IBR cables, and strategic wins in defense, we are witnessing the early outcomes of our strategic shift towards high-tech value-added solutions. Our continued investments in capacity expansion, product innovation, and global partnerships are positioning us at the forefront of next-gen connectivity and defense technology. Looking ahead, we see clear tailwinds with accelerated execution of BharatNet, 5G densification, rising global optical fiber demand, and expanding opportunities in indigenous defense manufacturing, all of which provide strong visibility and momentum. We have entered the second quarter FY26 with renewed confidence, a very healthy order book, and improving profitability. HFCL's fundamentals are stronger than ever, and we remain fully committed to creating long-term value for our stakeholders. Thank you once again for your continuous support. Ladies and gentlemen, now floor is open for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Balasubramaniam from Arihant Capital. Please proceed.
Good day, sir. Thank you so much for the opportunities. So my first question regarding data center. I think data center networking, total addressable market, it's more than $1 trillion over the next 4 years frame. I just want to understand how differentiate ourselves in terms of data center networking compared to our competitors. Because one of our competitors already making more than 20% of revenue from data center side only. So we could share more light on that industry side and our company capability side.
Thank you, Mr. Balasubramanian. The world market for data center is very, very large. Right now, with the kind of hyperscalers are coming up all over the world, particularly North America and Europe, the unprecedented growth, which we could not have imagined probably 6 months ago. Now, these data centers need different kind of products, servers and those kind of large capacity switches, which we don't manufacture. What we supply to them is high capacity fiber optic cables and also the passive connectivity solution product portfolio which we are building now. And revenue from them would start in maybe another quarter from now. Now, our expectation with this growth for passive connectivity solution as well as fiber optic cable, high capacity, high fiber count, is again long term, because this growth for data center is going to continue for at least 5 years. So we already have secured contracts from major players, and for a purpose of commercial confidentiality, I can't name them. And we are also in process of now getting our products certified for passive connectivity solutions for data centers from these customers. Customers remain the same. And we expect that this PCS solution, passive connectivity solution, is also going to give us a reasonably good amount of revenue for data centers in the next financial year. But of course, passive connectivity solution for telecom operators has already started giving us revenue, and our target for revenue from passive connectivity solutions for telcos, telecom service providers and other operators is about 450 crores in the current year. Data center would be on the top of that, whatever we do this year, but our real expectation for data center is to, from the next year for the PCS solutions, we are getting from various operators.
Got it, sir. Also, I think we showcased drone radars and electronic fuses at that Paris Air Show. So what is the commercialization roadmap, and are there any pending certifications or approvals? And secondly, we got around 90 crore defense order, especially for thermal sites and tactical cables. So what's the realistic revenue contribution timeline, and is there any technology transfer risk with partners like DRDO?
Look, revenue, as I said earlier also, in my last call, revenue from defense will start in this current quarter. Thermal weapon sight, tactical cables, where we have already started supplying, in fact, in Eastern Command. There was another tender which we had won, and we have started supplying. This 90 crore tender which we had declared L1, order is yet to be received, should be received soon. That as soon as the order is received, we will start supplying. Thermal weapon sights will start possibly supplying within this quarter. So there are number of products, which will start supplying this quarter. But yes, number of products are going to be getting approval possible in this quarter itself, which includes electronic fuses, for which we have been waiting for a long time, because ammunition required for testing was not available, which are manufactured only by the government factory, Munition India Limited. We paid before more than 6 months, and now ammunition has arrived for testing, and testing will be conducted by DRDO in August. If the testing is successful, for which we are very hopeful, because there are minor defects last time, we expect large number of orders. We already, even before approval, we are receiving large inquiries for export for this product. So we have a very high expectation from electronic fuses, of course. The drone detection radar is now included with a soft kill option. is detection and soft kill option. It is almost at the end of the lab trial, and we expect that field trial would start sometime late part of the August. Once the field trial are successful, we would offer it for production, which I expect should happen in this current financial year. Now, as we have seen, how drones are being used in the war this time, whether it was Operation Sindoor or whether Iran, Israel, or whether Israel, Hamas, or Ukraine, Russia, drones are the main weapon of warfare nowadays. So equally what you need is anti-drone systems. So this drone detection radar and also the soft kill option together with that. And as a system, when we sell it, again we expect good demand opportunity for this, not only in India, but internationally also.
Got it, sir. So my last question, what is the current scenario of optical fiber and optical fiber cable prices, and what is the status of inventory liquidation at global level operators?
What was the last point? What is the?
Inventory liquidation status at the global operators.
Okay. Now, the fiber prices are ranging between, 240 to 250 rupees per kilometer. Depending upon which fiber and whatever you are talking. The general D fiber, what we call D fiber, which is generally in use, 240 to 250 rupees per kilometer. The fiber cable realization prices, again depends, is between 850 to 900 rupees per kilometer. The cable between 850 to 900 rupees per fiber kilometer, and fiber, just the bare fiber, 240 to 250 rupees per kilometer. That is the price. Number two, the inventory levels have now significantly almost finished. That is why you see this increased demand of fiber optic cable from telcos also. Data center operators didn't have any inventory, so they are all doing fresh purchases. But telcos inventory is also almost finished now, so there is a renewed demand has come up from telcos. As a matter of fact, we continuously receive more and more orders from our customers, which are, the telcos or, suppliers to telcos. So inventory levels are now gone.
Got it, sir. Thanks.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. The next question is from the line of Siddhant Singh from Green Portfolio Private Limited. Please proceed.
Am I audible?
Yeah, Mr.
Yes.
Sir, go ahead.
Sir, so first, sir, can you bifurcate the defense order book and export order book out of total order book? Like how much is for defense and how much is for export?
Look, our export order book, give me a moment. Our export order book today is, just give me 1 second. About 400 crores. It's roughly about 400 crores.
Okay.
And from defense segment would be roughly about 12% of our total order book, which is 10,000 crores. The defense is about 1,300 crores, about, give or take a couple of crores.
Okay. Sir, and for defense, like which product is the highest contributing in order book? Like for which product we are getting highest order?
Look, defense, optical fiber, tactical cable is the highest portion, tactical cable, followed by thermal weapon sights, and operation and maintenance contracts are also there for the NFS work, which we had, done for the defense. And now we expect, of course, going forward with more and more products coming in our product portfolio, we really believe that, these will really pick up for radars and fuses and all those kind of things in next few months' time.
Okay. And sir, like if we receive a very big order for any defense product, are we capable enough for delivery? Like we have manufacturing capabilities to deliver a huge number of orders? right now, or we have to like develop
Look,
a manufacturing facility?
We have put up a facility in Hosur for manufacturing defense products. And I think we are capable of delivering, what we foresee the possibility of orders which we can get. But again, if very huge orders come all of a sudden, which I would be happy to receive, we can always increase our production facility. But anyway, for the foreseeable requirement, whatever we can get, we have production capacity in Hosur. But certain things, which we want to manufacture, for which we have applied for licenses, and also we have got TOT for multi-mode hand grenade, for example. That production will have to done a different production facility because those involve explosives. And for that you require large chunk of land and magazines and all that installed. So for that separate manufacturing facility would be required. But let us first receive the clearances for that and then we will look at that. But yes, we are working on them and we expect good opportunity for ammunitions also, for which we will be definitely establishing a separate production facility.
Okay. And like for ammunition fuses, like we will start receiving, like we will start getting revenue in FY27 only, like. For ammunition fuses, when we will be able to start recognizing revenue?
Look, again, let us assume that trials will be successful, which I hope August trial will be successful. If the trial of August are successful, then we can start getting revenue from the last quarter of the current financial year also for fuses, because trial successful 2 or 3 months in starting production. It should not take 2 or 3 months also. But definitely, if the trials are successful, from the last quarter of this financial year, we should start getting revenue from fuses. The orders are not going to be a problem, I can tell you.
Okay, sir. And one last question is that, sir, like you right now announced that we are going to raise 700 crores. Can you give the breakdown, like how much we are going to use as a capex and where we will be going to use that? And second is that, sir, our promoter holding is decreasing every quarter. So what is your take on that? Like whether you will be going to participate into fundraise or we are going to dilute our stake?
Siddharth, first of all, 700 was just an enabling resolution we have passed. We have still not decided when to raise, how much to raise, whether to raise. All these things are still under discussion. It's just an enabling resolution. Now, whenever we decide, the use would be, of course, to tap into the increasing defense opportunities, telecommunication opportunities, optical fiber cable opportunities, but majorly the major defense.
Ladies and gentlemen, the management's line got disconnected. We'll connect them shortly. Ladies and gentlemen, the management's line got disconnected. We'll connect with them shortly. Please stay connected.
Sorry, the line got disconnected.
Yes, sir.
Yeah,
you can continue.
Yeah, next question, please.
The next question is from the line of Darshil from Finterest Capital. Please proceed.
Hello, am I audible, sir?
Yeah, audible, Mr. Darshan, please proceed. Right?
Yes, sir. Thank you so much. Sir, just wanted to understand, since you are saying that, the demand is back again for the fiber optical cables, when are these margins expected to be in the similar lines what we have seen in the last year, which were around 14-15%? Just wanted your views on this.
From this quarter itself, in fact, from July, so not from July, July, which was the last month of the Q1, we started into that kind of a margin. And from this, margins would continue to be of that level of roughly about 15% or so. Currently, whatever orders we are executing, most of them are in that range of margin.
Okay, and this margin reduction was purely due to the demand issue, or was it something else also?
So really the decrease in margin was because of low demand. Once you have low demand and the capacity utilization is lower with the manufacturers, they tend to start selling at a lower prices, which is normal. It's a demand-supply equation. Now the demand has gone up considerably. As a result of that, of course, prices have also gone up, and buyers are also facing a capacity constraint in sense for high quality cables or high technology cables. These are not. I'm not saying the demand has increased for run of the mill cables, which so many people manufacture. But the cables which are really high technology cables, IBR, let's say intermittently bonded ribbon cable, as an example of 864 fiber or 728 fiber, which not so many people are able to manufacture because they are highly critical in technology and quality. So there the prices have gone up because the manufacturers are not so many, and at the same point of time margins would also be better. So technologically these are different level of products.
Got it. So sir, given the kind of the capacity expansion also we are doing, so looking at this demand which has obviously right now that has come up again, what is your view on this capacities that we are expanding, and when these capacities will be live? Will this be in this year or the next subsequent years?
Look, this capacity expansion is already in progress. There are a number of machines. For example, we are buying 10 machines. As an example, I am telling you. So what would happen? They would come one by one being delivered. These are all coming mostly from Austria. So Austria, not Australia, Austria, Europe. So they are coming one after another. So expansion is already in process, but it would be completed before the end of this financial year. But it's not that that capacity expansion will start one particular day. It is already in process. So because factory building is already there, space is already there. As the machines come, we are fitting them. One machine is expected to arrive very shortly. I think maybe another 2-3 days or 5 days. So these are continuous expansion, but full would be completed by March. So revenue would start accruing from this expansion in the current financial year itself.
Okay. And final question would be on the numbers front, sir. I have been hearing that we are doing a lot of things in defense with this new capacities also, and with last quarter we have given somewhere 25-30% guidance. Sir, where are we standing today, and what kind of numbers will we see this year, and the market?
I would still stand with the guidance which I gave, that this year our revenue is expected to be 25-30% higher than about 25% higher than the last financial year. And as far as defense products are concerned, yes, some of the products got delayed like fuses for none of our fault. This was ammunition not being supplied by government companies, which are the only producer of ammunition of that kind today. So this got delayed. Otherwise, revenue would have started accruing much sooner. In fact, we have received LOIs for our radars also, ground surveillance radars, but they have not culminated in orders, which I expect to happen pretty soon. This is for export. Similarly, for multi-mode hand grenade, which we have got a technology from DRDO, and we are in process of producing first 100 or so samples for qualification by DRDO, and those are also already under production. So once they are qualified, we expect to receive large number of export orders for multimode hand grenade also. So, though, look, defense is a bit of a peculiar sector. Things take time. But if you get in, then, you get continuous orders. Similarly, as I've been telling, we have been shortlisted for upgradation of BMP-2, which is the armored personnel carrier. But
Ladies and gentlemen, please stay connected. The management's line got disconnected.
Line is lost.
hello?
Yes, sir, you can talk
Yeah,
now.
go ahead, madam.
Yes. Yes, sir. Yes,
Hello?
Sir, you are on the call.
Yeah.
I don't know up to what you heard. I don't know when it got disconnected. I also don't even know. Till what time you heard?
Sir, till the LOIs that you had received from the...
Yeah, so we expect to receive orders also very soon. So what I was telling is, defense takes time, but once it starts happening, it happens continuously. Like BMP-2, orders, tender has been postponed twice. Now it is on 29 September. If it happened again, and if we had won, we would have started seeing revenue in this year itself. So it's quite, likely that, once the order starts coming, then it's a continuous process.
Correct. Got it, sir. And of the 700 crore, fundraise that we have enabled, will there be something for, reducing the borrowings, sir? Because right now, interest is...
It's just an enabling resolution.
Correct.
And the details are being worked out. We will definitely let you know when we go to the final decision.
Okay, no problem, sir.
Enabling resolution up to 700 crores, not for 700 crores.
No problem. We'll wait for your announcement, sir. Thank you so much, and all the best for your subsequent quarters.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. The next question is from the line of Agman Shah from RSPN Ventures. Please proceed.
Hello. Hi, am I audible? Hello.
So the line of management got disconnected. We'll be connecting them shortly.
Okay.
With the BSNL network is getting disconnected all the time. I'm really sorry. Can't.
Yes, sir, you can start.
Hi, sir. Am I audible?
Yeah. Hello.
Yes, sir. Am I audible?
Yeah, you're audible.
Okay. Thank you for allowing me this opportunity. I just had 2 questions. Sorry, I joined the call a bit late. I might have missed it. So what is the capacity utilization of optic fiber?
Look, optical fiber, we are working at 100% capacity for optical fiber. We are at 100%. Optical fiber cable, the capacity utilization has started improving in the first quarter. Particularly June month has started, May, June, it has really started improving. July, it has further improved and now reaching to almost 100%.
Okay, understood. And sir, last question. Just wanted a status update on Delhi NCR factory and the revenue potential from that factory, the capex.
Say that again, I couldn't hear you.
Just wanted to know the progress on the Delhi NCR factory for Telecom and the revenue potential from that.
Okay, we have already started producing, this fiber, FWHCP, the 5G FWHCP, we produced system integrated in there only, which was ordered already. We have supplied roughly about 600 crores. Another 200 crore supply would start in another maybe 3 to 4 weeks. Router supply, router production has picked up from there, and supply would start, had started in small lots already. The bulk production would start sometime in August. We will be starting bulk production of routers from that factory. The work is already on. Production is already on.
Okay. Thank you. That's it from myself.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. The next question is from the line of Lakshmi from Kesma Wealth Private Limited. Please proceed.
Hi sir, are you able to hear me?
Yeah, Lakshmi, where can we hear you?
Sir, I just want to understand what is the contribution of optical fiber in our total revenue mix and how much is it part of our order book, sir?
Yeah, that as far as order book is concerned, of the fiber optic cable, you have to understand, they keep on coming. It never comes into a big number by once itself.
Okay.
It keeps on coming. You apply for 50 crores, you get another order of 50 crores on the same customer. So it comes like that. But in the total products which we have mentioned, total products, about 65% of the product revenue is the optical fiber cable of the product revenue.
Understood, sir. Sir, my next question is, you are talking about passive solutions for telecom and defense, sir. Could you just expand on that, sir? Because I'm not able to get that. What would be, is it optical fiber or something else, sir?
What is patch-on solution? I could not understand.
Yeah. Passive solutions for telecom, you're saying, you guys are developing.
Oh, sorry. Passive connectivity solutions, for when you lay optical fiber cable, whether in a data center or in a telco network, you need to lay down fibers, You need the jointing boxes.
Participants, the management's line got disconnected. Please stay connected.
Connected. This time I've given my mobile number. She calls me on mobile number. There is some problem with the BSNL line,
Yes, sir. We have the management on the line now.
So this passive connectivity solution is the material which are, does not need electricity but are necessary for putting optical network in place, like jointing boxes, the hand holes, manholes, optical splitters, and those kind of things.
Okay, sir. Understood. Very good. If I could squeeze one more question, sir. BharatNet is then also in phase 3. How much revenue are you expecting this financial year, sir?
BharatNet, particularly revenue, I would say of the total order we have got roughly about 5,000 crores, out of which 30% of that, roughly about, I would say, but no, 30% cannot be 6 months, It would be about in the range of about 1,000 crores.
1,000 crores. Understood, sir. Sir,
Yeah,
one more question.
it may be 100, it may be 900, something around that.
Okay, sir. Sir, you're talking about this night vision thing about 45 crores, which you said like supply will start in Q2 in previous phone calls, sir. Is it going to happen for this quarter, sir, or it started?
Yeah, we are trying our best that it should happen in this quarter itself. We are trying our best.
But you got approvals are done, sir?
Yeah, all approval done. All approval done and then only order received. All approvals done.
Okay, sir. That's it from the side, sir. Thank you, sir.
Yeah.
Thank you. The next question is from the line of Dipesh from Manya Finance. Please proceed.
Hello, sir. Am I audible?
Yeah, audible. Dipesh, go ahead.
Yes, sir. So just one question. What is the succession planning, sir?
Succession planning. Sir, I am still young enough.
Yes, sir. We hope that, for the next many years we see you. But just as shareholders, just want to know about, if there is any succession
planning. We want to completely professionalize the company, that it would be run by professional CEOs and professional business heads. Already, company is run by business heads for different business verticals. But in future, we expect shareholders to just play the shareholders' role and company run by professional CEOs. That is the way we are planning now.
Sir, none of the next generation of the Nahata families are planning to join the business?
No, they are planning to join the business, but from the perspective of a shareholder, not as a day-to-day running of the company. That should be completely professionalized. We believe.
Ladies and gentlemen, please stay connected. The line got disconnected. Ladies and gentlemen, thank you for the patience. We have the management connected.
Yeah, now we are on the mobile, so hopefully maybe this time it will not get disconnected. Now I'm not on fixed time, but I'm on mobile. Yeah, next question, please.
Yes, sir. So, again, only on the succession planning, I just wanted to understand if the next generation is actively part of the business or they just will be part of the board.
But they will actively participate, of course. They will actively participate. But one is day-to-day operation, what is the production value, what is the quantity, who has been delivered, which raw material has been purchased. Those should now be left to the professional CEOs. The next generation should focus more on strategy, more on the policies, more on the outside environment management, building relationship with customers, those kind of things. Not to handle the day-to-day operating issues. That's the way it is going to be.
Right.
That should be professional CEOs to do that.
Absolutely. And we hope to see you, sir, for a very, very long time.
Hopefully.
Yes, sir. And just one, if I can add just one question. When will this revenue degrowth actually end, and when will we get the true realization of the huge order book which we are having?
Realization of the order book. Revenue realization for the order book is continuing. It's continuing. Of course, I think Q2 would be better than Q1. Of course, Q2 would be better. EPC revenue would go up. EPC revenue would go up, and revenue from fiber optic cable business will also go up with some more capacity utilization happening now. So, revenue realization is already there, but it is going to increase in this quarter and the quarter next even further.
No, just wanted to understand when will the revenue degrowth actually end? The year-on-year revenue degrowth.
Because the major reason was the fiber optic cable revenue going down for last 2 years. Fiber optic cable revenue, what we expected to happen, it was 40% of that. Otherwise, the revenue would have increased. And that was not unique in our case. That happened all over the world. Whether you take Corning, whether you take PCN, OFS, whoever you take, everybody's revenue had gone down last 2 years.
Great, sir. Great. Thank you so much, sir, for the clarity. And all the very best to you.
Thank you.
Thank you. The next question is from the line of Saket Kapoor from Kapoor & Company. Please proceed.
No, Nadaji, I was there in the queue. Maybe the queue is long and the intermittent disruption was also there. सर आपको तो टेलीकॉम डिपार्टमेंट में भी इन्फॉर्म करना चाहिए कि आपकी कॉल सबसे ज्यादा इंटरप्टेड हो रही है जबकि आप खुद ही सर्विस प्रोवाइडर।
कभी नहीं भाई, फर्स्ट टाइम ऐसा भाई जितनी बार कट रही है। आई डोंट नो व्हाट हैज हैपेंड। मे बी रेन के कारण जो नेटवर्क में प्रॉब्लम आई लगती है मुझे।
Sir, firstly, when we look at our consolidated revenue for the telecom product, although the revenue rises, there is a revenue increase by 92 crore. The contribution to the profitability is 30%, that is 29 crore. So, what goes into this telecom product specifically when we consolidate our numbers?
Telecom products goes, one is of course the fixed wireless access terminal which we have produced, the unlicensed band radios which produce. So these are some of the typical telecom products which produce, and where we have a lower profit margin. The profit margin fiber optic cable, which is also part of the product revenue only, has been higher, much higher. As I said, about 15% or so. But then the telecom electronic products, the margin has been lower. So this is how it is.
Okay, sir. We have also seen the promoter's stake also coming down over the last 2 financial years. That is through the open market selling, especially through your entity. So what should investor read into this gradual reduction in your stake in the company? And again, we are coming with a QIP proposal, so that will again further dilute our holding going ahead. So what message that you are giving to the investing community by these frequent selling by you?
Saket, first of all, yes. This QIP proposal is still just enabling. We are not deciding that whether we are going ahead with QIP or not. That is number
one. Fine, sir. Fine.
And if you look at promoter stake, if you look at in last few years, just don't look at 1 or 2 years. Promoter stake, has gone down by 1 crore 92 lakh shares against some 47 crore of shares promoters hold, which is not a very big number. And promoter also needs sometimes money for personal use, including the social, use, also charitable purposes and all that. So, still promoter has substantial holding, substantial holding is still there. More than 31% holding is there. And, promoter always has the option to increase the holding. Earlier we had purchased shares from open market, which were, of course, informed to stock exchange. Whenever we did that, we subscribed it to warrants also. If we need be, we can do that in future also. I'm not saying that we would do that or not, but if need be, we can do that also. So there is not a very substantial reduction. 1 crore 92 lakh shares on an overall basis. If I look at the data for last 6 or 7 years, it's not such a big number. But promoter needs money for personal purposes also.
But sir, the market cap has gone down. The investor interest is also is lower, and there is these all create depressions also for the market, because it took sense from you when you upped your stake at that time 3 years ago, and today your stake from 35% to 31% in a span of just 2 quarters. Do speak volume, sir. This is my understanding, sir.
Look, market cap is not because of that promoter has sold the shares or that market, share price has gone down earlier only. Promoter did not sell at, that has got any relation to the market cap. I think so many companies, promoters in the country have sold their stakes. Some stakes have been sold because the promoter needs money for some personal reason. What does he do? Where does he bring money from? I'm not going to take, mishandle money from the company or anything. So only
second point,
and my salary is not enough to take care of some of the needs which may be there, So what do? You sell only your stake to get money, na? Where else you'll get money from?
So when you say that this is a breakout year for the organization, in your press release, you have alluded to the fact, written it, that HFCL, this will be the breakout year. What according to you is breakout year for an organization in terms of profitability or revenue? Where are we eyeing that we are using this?
I tell you, listen to me. 3, 4 things. One, quarter-on-quarter revenue will keep on increasing. Number 1. Number 2, defense will start really showing revenue coming up, which we have been trying since last 2-3 years. But this year, now the defense has started showing revenue. Factory has been commissioned for defense products. More number of defense products we are adding in our portfolio, including technology transfer from DRDO, and maybe in future there may be some technology transfers from some foreign partners also, maybe. So all this would really mean that new streams of revenue would start happening, and then revenue from data centers, which was never there, has started happening in optical fiber cable, and we will bring up revenue from data center for passive connectivity solutions also. So new revenues in defense services, new revenues in data centers, fiber optic cables, all this would make it a breakout year.
Okay, and lastly, sir, as you mentioned that revenue will grow, so in the turnkey contract, can we expect now the losses to mitigate? In the last 2 quarters, our PBT losses have moved up to 100 crores.
Yes, it will happen, because with the increase in revenue, particularly in increase in the speed of BharatNet, this is definitely going to happen.
Okay, and as a year as a whole, what should we look, sir, for the turnkey business performance be?
Sorry to interrupt, Mr. Saket.
Ma'am, I'm just concluding. Please allow me to conclude, ma'am. That will be the last question.
Go ahead, Mr. Saket.
Sir, what I was trying to understand is, for the year as a whole, turnkey business, that is the EPC part, how will that it will be shaping up, and whether the bottom line will be positive or
What I have said, Mr. Kapoor, overall we can look for about 25% growth in the revenue. Overall, that is what our best estimate is, that there should be 25% growth in the revenue of the company in the current financial year. Now, how much it will grow in EPC, how much it will grow in defense or products, very difficult to say, but at least EPC will grow. And also I can tell you, fiber optic cable business, it will grow by 100%. And that is our current estimation. Last year it was 1,200 crores. This year we should be reaching to 2,400 crores.
Okay. Okay, sir.
2,400 crores is the expected revenue of fiber optic cable, and in my opinion, more than 50% of that is going to be exports.
Okay, sir. I had just one more part on the right issue for Exicom, sir. So we will be participating in this.
The Exicom question I can't answer. I am not.
No, HFCL is a shareholder, sir. HFCL we hold 6%. So we will be participating to the extent of our proportion to the issue.
No. We have already said that we are not participating.
Okay. Thank you, sir. All the best to the team, sir, for going ahead. Thank you. Thank you.
Thank you.
Thank you, sir. Thank you, sir.
Thank you. The next question is from the line of Nikhil Purohit from Fident Asset Management. Please proceed.
Hi, sir. Am I audible?
No, Nikhil bhai, you're audible. Please go ahead.
Thanks for the opportunity. So my first question is, what is our Hosur defense facility utilization right now? And what do we target by the end of this year?
The defense has just started, Nikhil. It has just started. So I wouldn't say there is any percentage to that, It just started, So Q2 we would be starting producing this, thermal weapon sights there. Multi-mode hand grenade, if you get order, we will not be producing there because right now we don't have license for explosives. Once we get explosive license, we'll have to produce at a different facility, not at this place. So it is just starting. So I won't put a number at this point of time to that.
Okay, not for the end of the year as well, right?
No, not at the end of the year.
Okay.
Not at this point of time. But yes, maybe next quarter I should be able to give you some number.
Got it. Okay. And out of the 10,480, the order book executable is how much for this year?
This year is out of this particular 10,000, particularly I think 3,000 should be executable in the current year, but more number of orders are being received which are to be executed in the current year itself, particularly fiber optic cable, for example, where you receive small orders like 40, 50, 30 crores, and which we keep on executing. But out of this 10,000 crores, it should be around about 3,000 crores.
3,000. Okay, got it. And what is the PLI we are expecting for this year? And the
PLI, we are not expecting any PLI this year.
Okay, so this is I think Q3 FY25 we had talked about some PLI around 40-50 crores in FY26.
No,
so
we thought we would receive, but we could not reach to the level of commitment we had made in terms of the revenue from indigenously manufactured products. So we really could not reach to that level. It is our mistake that we projected high numbers in the beginning. If we had projected lower numbers, we would have got PLI. There was no bar on projecting lower numbers. We thought we should be able to do more, but there was not so much of demand for indigenously manufactured telecom products, and fiber optic cable is not a part of that PLI list. So it's unfortunate that we did not get any PLI, and nor do we expect anything in this current financial year.
Okay. And what will be the capex for this year?
Capex for this year, give me a minute, I'll come back to you before we end this. Roughly, I think currently about 250 crores, because about 130 crores is going in IBR cable itself, and something will go on optical fiber facility and miscellaneous, roughly about 250 crores you can see in the full year.
Okay, got it. Just one last question. So OFC, you mentioned 2,400 crores this year, up from 1,200 crores last year. Could you give an estimate for the defense sector as well, the defense segment? What revenue are we targeting this year?
I would not give an estimate, but maybe, if current estimation, if you take from me, my best estimation could be leading to about 200 plus crores, 200 plus crores. something like that. Again, this is a very top of the head estimate I am giving you because I must answer your question, but about 200 crores, I would say.
Okay. And we stick to the 15%. What's our margin guidance, sorry?
Margin level in defense?
No, overall.
Overall margin level here is in fiber optic cable, I expect to be about 15%. In turnkey, it is about 6 to 8%, or sometimes little bit more in BharatNet, or overall 6 to 8% is in turnkey, I would say. Those are the kind of margins. In telecom products, again, depends product to product, time to time, situation to situation. Like last quarter, the telecom product margin was very low.
Okay. Got it. Thank you. Those were my questions. Thanks.
Thank you. The next question is from the line of Abhishek from Neste Wealth LLP. Please proceed.
Yeah, thank you, Nada sir, for the opportunity. Just wanted to have your understanding on last financial we did a revenue of 4,064 crores, and this quarter we are at 871 or 869 crores, something like that. So if we assume 25% growth rate, we have to do somewhere around 4,200 crores in this 9-month period, which is approximately 1,400 crores per quarter. So are we on it?
Yeah, we are on it. I am not saying that the Q2 would be 1,400 crores. So okay. Q2 would definitely be better than the Q1, and every quarter we will increase. And I am quite confident that 25% increase in the revenue would be there. Looking at the order book itself and the kind of orders we are receiving, we should be able to reach out of the 10,000 crores, 3,000 crores should be executable in this year itself. Then there will be more orders coming up in the current financial year. So I don't have any reason to believe that it would not increase by 25%.
And Q2, can we expect Q2 to be profitable now, PAT positive?
Well, I don't know at this point of time. It's too early to say. But revenue is going to be definitely far better. And with the increase in revenue, definitely marginal costing and, overall overhead, per unit of revenue goes down. So, I wouldn't give any guidance, but yes, it would be better than the current quarter.
Okay, thank you. And coming to the DRDO fuse part, so if we are able to do the test and all, DRDO is able to do the test and that's pass, how early we can have the order flow from here? Because last time you had mentioned that we had confirmed orders which were wanting certificate from DRDO. 800 odd crores kind of.
That was not for handheld grenade. That was for fuse. We had order of 700 crores for exports. It was confirmed, but the testing could not happen, which was not our fault because ammunition was not supplied by government, and this order had to go. Nobody would wait for us. Now we have got that ammunition. Testing is to take place in August, and hope that would be successful. No reason not to be. If that is successful, yes, orders, plenty of orders would be there for electronic fuses. So order is not going to be a problem. Handheld grenade, if the testing is successful, which again I believe it should be, it's not such a complicated product and technology from DRDO. So there is a reasonably good demand, but I don't know at this point of time. We have not gone to the market aggressively, selling this product, but we have got LOI from 1 or 2 countries for buying multi-mode handheld grenade. But once I let the testing is over, then I will come back to you.
Okay. And one last thing on the DRDO fuse test part. Let's say it doesn't come to the expectations of DRDO. So how long we'll have to again wait for the next round of ammunition?
Look, first of all, I don't think there is any reason this time that it will not come to the expectation of DRDO. Last time also, out of how many fuses fired, only one type of fuse had one small problem. So there was a remark in the certificate, and I didn't want to go with that remark to the market. So I don't think there should be any problem this time in the finally certifying the product. But if let us assume it doesn't happen. So this time ammunition deliveries would not be so late, maybe 2 to 3 months time.
Okay. Okay. Thank you. Thank you so much. That's it from my side.
Thank you. Thank you, Abhishek.
Thank you. The next question is from the line of Khush from Analyst Asset. Please proceed.
Hello.
Yeah.
Am I audible?
Go ahead, Khush.
Yeah. So my doubt is about on the realization only. So if we have the order book
Pardon me, Khush, I could not hear you. You have to speak loudly.
Hello.
Yeah, go ahead.
Am I audible? Yeah, sure. So my doubt is around the order book around 10,000. You are saying
Khush, we can't hear you. Khush, your voice is going up and down, Your voice is going up and down.
Hello. Am I audible now?
Yeah, go ahead. Yeah.
So out of order book of 10,000 crore, how much is of from EPC?
I will tell you. Just give me a second. Out of that, about 6,400 crore would be for EPC.
And how much are they expecting it to convert it into the realization in this year?
Look, out of the total 10,000 crore, I am seeing about 3,000 crore will be converted into this year. Now, out of EPC of 6,494, I would say 2,000 crore, something like 2,000 crore should be convertible.
Okay, so so which means around 1,000 crore would be from our products. So it are the
out of this 10,000 crores, but there would be more orders coming in.
Okay. And sir, on the optical fiber cable, so we are already around 100% utilization. So when we are expecting to get the additional this capacity as we are doing capex?
Look, additional capacity has already started coming in. And when I say 100% capacity utilization, it has really started picked up from the month of July, As I said, rather June was better, July has even been better. And there are so many different kind of cables we produce. So not that every cable we produce to 100% of capacity. Some may be less than 100% also. But overall, we are reaching to, again you have to realize one more thing, I am being maybe too technical. When you say 100%, there is always a variation between installed capacity and capacity which you can produce. Installed capacity people count in the same type of cable being produced continuously, which doesn't happen in real life because, cables, customers, depending on requirement, keeps on changing. So real capacity becomes roughly about 80% of the installed capacity on the single cable basis. So you have to take that 80% as 100%. From there you have to go on. So right now in July month, we should be, reaching about 80% of that 80% because that 80% is the real capacity. And then the expansion capacity has already started happening and it would be fully completed by March.
By March. So we are confident that we will be able to do 2,400 crores from the current capacity.
Yeah, absolutely confident. Fiber optic cable division with all its connectivity solutions and all put together would definitely expected to do 2,400 crores. These are going to be the big kickers this time. Fiber optic cable going to be double than last year. Defense production is going to start. We have got large orders from BharatNet. We have got started producing routers. We are the only second Indian company to do so after Tejas to produce routers indigenously. We got orders of 650 crores for routers. More orders are expected. We have supplied 600 crores worth of locally designed and produced 5G products, unlicensed band radios. We have supplied 500,000 till now, not in this year, but overall 500,000. So all these are big kickers this time in the current financial year for our company.
Thank you. Due to time constraint, that was the last question. Investors can directly reach out to the investor relation team for further questions. I would now like to hand the conference over to the management for the closing comments.
Thank you very much to all the investors and the participants in the call. And I really appreciate your time and effort you have made in joining our call. And thank you very much. Thanks a lot.
On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.